Good evening. This is Jack from Charles in the Markets, and this is the Bigger Picture webinar for the evening of Sunday, the 4th of January. Although, really, it's not quite the evening yet, but hey, that's when I usually do it. All right, great. Let's have a look at what happened last week. Now, I did a post on Friday talking about a lean towards the upside here. What does this look like on ES? Well, it's kind of like a bull flag at the moment, and subject to the market reaction to Trump starting his special military operation over the weekend against Venezuela, if that doesn't have too much of an impact, I'd be leaning towards the upside here. So we will see how that goes. No current divergence. On NQ, annoyingly, we had this head and shoulders which broke down and then failed just before it went down to the target. That happens sometimes. But we made it down into the target area. I drew this line here to show where this inverted head and shoulders pointing up to the 25,990 area would fail, and it is some distance away from failing. Now it could be that we're going to be pushed down into the fail area by the military adventures over the weekend, but we will see what happens when the market opens. But for now, this is still in retracement country, and the obvious next move for me is still up. Okay, IWM, we actually went down and made a new low for December just before the end of December. And I've drawn in a pretty nice looking little flag here, and it looks good. We were testing declining resistance from this high here, but overall, this looks like an awful lot like a bull flag. On YM, we had a double bottom here, and that's failed, but it's only failed because actually we've come back and retested the low. I've got this as a likely descending triangle unless it makes lower lows. We will see, but I've got a better version of that marked up on the RTH chart for Dire. Okay, looking at DAX, has gone higher, basically still making new highs. We have some negative divergence here. Not really. It had gone too low before we got it. And ESTX, tiny bit of negative divergence that I've not marked in because it really is fairly insignificant. And again, it made a new high on Friday. All right, great. Let's have a look at those on the bigger picture charts. And SPX. Okay, now moving over to Dire first. Dire, you can see these lows very, very close together, 478.37, 478.38. This is a beautiful little descending triangle, which in this particular context, I'm regarding as a bull flag. That's very nice. No current divergence here. If we look at the QQQ chart, we've got an overall bull flag channel here. Now, the question is it going to go down and test the lower trend line here? I'm leaning against that, but it is possible. Here we've got an IHS which didn't quite make target, but was probably close enough and hasn't failed on the move down either. That could fail, but actually at this point I'm not sure that makes a lot of difference. This is all really about when this bull flag breaks up and whether we're going to see lower lows before we see that. All right, SPX came down and broke very slightly the rising support here. Not really seeing that as significant. Obviously, we've made the new all-time highs here already. And looking at IWM, we've got RSI 14 buy signal fixed, but it's reached the possible near miss target already. We had a whole load of little RSI 5 buy signals on the hourly charts, but they pretty much all made target. We've got a very nice looking bull flag wedge here. I have drawn in a potential alternate trend line, which would be a bull flag channel trend line. But at the moment, this is holding pretty well. So really, what I'm looking at here in terms of the short-term pattern setups is bull flags across the board. And it's possible that those might get knocked out by the military adventure over the weekend. But we'll have to see when it opens. My lean is it's probably not going to knock this down heavily, even though, obviously, I have very mixed feelings about the whole thing because it just looks like military adventurism, which is distracting, potentially, from a lot of things that America probably needs to be actually looking at fairly hard. But, also the other thing is, listening to the news about people talking about, we can go in and take their oil. The problem is you can't take oil away. Venezuela's got the biggest oil reserves in the country, but unless you actually stay and run the place, it's not moving anywhere. You can extract some of it as long as you are running the place, but the idea that Iraq was going to, Iraq had lots of oil and therefore, it's going to pay for the invasion was going to pay for itself was just utter rubbish. And in Venezuela, that's not going to happen either. So I don't think there's any real economic upside from this. This is just neo-imperialism, I think. All right, looking at the daily charts, we broke down towards the daily middle band. I've got that at 68.56, and we broke back above it on Tuesday. Is this close enough that you could regard this as a close on the daily middle band? Yes. And it wasn't a full rejection, which would generally basically reverse the whole of the move down into that, but it didn't do that. On ES, we closed a little below the daily middle band. On the Qs, we closed again a little below it. On Dia, we closed a little back a little above it. IWM was nowhere near close to it. So at the moment, kind of a mixed bag. It wasn't a strong rejection back above, but at the moment, there's certainly two of them did not confirm to the downside, although QQQ did. In terms of the hourly signals, we had RSI 5 buy signals fixed across the board. We've still got that going on SPX. And looking at the Qs, that made the possible near miss target. Looking at Dia, it made the full target. And IWM, I think we had both RSI 14 and RSI 5 once fixed there. Let's have a look. Yeah, we did. RSI 5.1 made target, and the weak RSI 14 buy signal is still ongoing. So we've got a bit of upside. We've got a nice, encouraging pattern set up, and if the news isn't going to derail the setup here, I would say there's a pretty strong lean to the upside. In terms of DAX, got a bit higher here. The closer we get to 24.8k, which is the all-time high, the more likely it is we're going to retest it. This is already looking more likely to retest the high than it is to come down and possibly form an alternate head and shoulders here. Looking at Nikkei, triangle breaking up, and actually the obvious target for this triangle breaking up would be a retest the high at 52.6k. I'm expecting to see more upside. I'm not seeing anything really to suggest a big move to the downside unless the market reaction to the Venezuela adventure is very negative. We shall see. All right, great. Let's have a look at DX. Okay, DX, we've got a very nice looking double bottom here, but it hasn't broken up. And we've also got a pretty nice looking double top, which has already broken down with the target in the 97.19 area, which hasn't made. So the question is this reversing back up? And I think it might be. We had a little IHS. That's pretty much made target, not quite made it to the full target in the 98.24 area, but got pretty damn close and testing the new monthly pivot at 98.22. So, I'm inclined to write that off at the moment. The key thing is are we going to go up and break up from this double bottom and potentially see a rejection back up to the high? And I'm thinking that is possible. Let's have a look at the currencies. Here on UUSD, we've got a lovely looking double top. See a sustained breakdown below basically 1.17, and that would have a target in about the 1.16125 area, I think. And that would be a significant rejection back down. We've got a we've got a rising megaphone here, which has already broken down. Nice topping pattern. That looks nice. This is a fairly clearly bearish setup. Doesn't have to break down, but usually would. In terms of GBP, we had a nice rising wedge here. That looked like bearish overthrow. We've now broken down from it. Not seeing an obvious reversal pattern here yet, but again, it looks encouragingly bearish. On USD/JPY, which of course would tend to go up with DX, we've still got unfinished business above at the retest of this high here, just below 1.158. We will see. And USD CAD, again, goes up with DX. Nice looking little IHS, which has just broken up with a target in the 1.3812 area. And we've got a big falling wedge, which has broken up as well. So altogether, this actually looks pretty encouraging for the dollar to head higher. We will see how that goes. Not a lot to say really in terms of Australian dollar or NZUSD, although NZUSD is on a 60-minute buy signal. Again, we've got a very nice looking double top on NZUSD though, and that may well break down. But in terms of the dollar index, this isn't really significant. I don't think the Australian dollar or the or NZ are actually in the dollar index, so we'll see. All right, great. Let's have a look at the bigger picture on those. Okay, on the US dollar, We've still got a monthly RSI 5 buy signal fixed. That still leans bullish. It could fail. And actually, I had a very similar signal this weekend. I've marked as failed on copper. But these don't usually fail, and I'm liking the upside on this one. Or at least I'm expecting to see some more upside before possibility of failure. Now, one thing we do have to need to consider the overall market as well as the patterns here. The patterns are very encouragingly bullish. Lovely looking bull flag, nice looking little level top and bottom trying to break up, and encouraging news to the upside in terms of the pattern setup. And signals pretty encouraging too. What's not encouraging is the administration's policies, which are fairly dollar negative. So we've not really seen, apart from the plunge at the beginning of the year, we've not really seen an awful lot of action all year. In terms of the weekly chart, we've still got a weak RSI 5 buy signal fixed, and we had an RSI 5 sell signal reach the possible near miss target, and that definitely delivered with a retracement down. The question is, are we going to turn back up? We've still got a weak RSI 14 buy signal fixed. In terms of the daily chart, we had a very nice RSI 5 buy signal, and that's already made target. We are testing the daily middle band, closed slightly above it, 98.43 versus 98.36 for the middle band. And if it can consolidate above that, then yeah, this could most definitely reverse back up. And this double bottom, breaking up with a target in the 104.10 area, is most definitely not invalidated. We shall see. If, in case you were wondering what would invalidate a double bottom, it's basically going through below either of the bottoms. Actually, if I remember, I've got one of those to show you today. Okay, in terms of USD, on the monthly chart, we've got a sell signal fixed on the RSI 5, and we've got a lovely looking bear flag, and we've got another one on GBP USD as well. These are very supportive of the patterns on the US dollar chart, the bull flag on that. Doesn't mean any of these actually need to make target, but nonetheless, they are encouraging. In terms of GBP, we've got an RSI 5 sell signal fixed as well here. Although, I've got to say, this does look rather like a bull flag. So we shall see. But we've got a nice RSI 5 sell signal fixed. Generally speaking, these would tend to make target, but not always. I had a failed one here, for instance. But even that had a pretty decent try at making target. And I've got another failed one here. But I've got 1, 2, 3, 4, 5, 6. 6 made target, 3 failed on the RSI 5s. And actually, that's a less good hit rate than I would have expected. Okay, USD JPY. Look, we've got a bit of unfinished business above. I am wondering whether we're forming a bullish triangle here. Watching to see. We will see. In terms of the weekly chart, I've got this as a very nice looking rising megaphone, and I'm thinking we may be topping out for a move down within that megaphone. In terms of the chart here, does this look like a triangle? Not a really nice triangle here, but yeah, we might have got basically lower high so far, and we've got a higher low here. I am wondering about it. We shall see. All right, USD CAD. We've been consolidating basically for. We've been forming a high here for basically 10 years. We've been trading a range on USD CAD. Could see a break higher here, but remember, of course, CAD, I'm leaning towards getting stronger. But USD CAD, of course, when USD CAD goes up, that means the CAD's getting weaker. And if CAD USD, then it would going up would make it stronger. I'm leaning towards more strength for CAD over the coming year, so I'm liking the downside here. But we will see. This would tend to go up with DX, though. We shall see. I mean, in terms of the fundamentals, there is, I think, no doubt that things are looking a little ugly for DX over the next few years, but we'll see. Okay, doesn't mean we can't have another last thrust up before that happens, but it doesn't mean that's going to happen, however nice the bullish setup is. Okay, Australian dollar. We have a slight break up over this declining resistance, possible little level bottom here. We'll see. NZUSD, we've been forming this triangle here for 5 years, and waiting to see which way we break up from this, but at the moment we've still got plenty of room to move within it. We will see, but this is a very nice looking pattern. We will see how this develops. All right, great. Let's have a look at bonds. Okay, looking at ZB. ZB, there was a possible double bottom forming here, but then it resolved into a bear flag triangle, and that bear flag triangle has broken down with a target at a retest of the December low, which I've got in about the 114.17 area. On ZN, we had possible bottoming action here too. We actually had a little double bottom which broke up and made target. But really, we've been forming what looks an awful lot like a bearish triangle. Sooner or later, I'd expect this to break down, make this target very slightly below at the retest of this low here at about 112, and then likely continue down, because on the bigger picture, on ZN, we've got a double top that is broken down with a target in the 110.17 to 110.12 area, and on ZB, we've got a head and shoulders which is broken down with a target in the 112.04 area. All right, let's have a look at those on the bigger picture as well. Right, looking at the TYX monthly chart, obviously on the bigger picture, the thing I've been watching, well, for the last year, is this very large potential IHS with a target up here in the 95 area. Now, I was saying that, and I have been saying that in the event that people really lose confidence in the dollar and the US government having any kind of a plan to reduce or at some stage even repay its national debt, then we could see interest rates go up a lot higher. And at the moment, we've got this this ceiling at about the 5 to 5.5 area, and I'm waiting to see if that breaks. We will see. We will see. But at the moment, we're holding above the monthly middle band, and we are holding just below that high. And really, there is cause for concern. The debt has basically accelerated going up under Trump so far, and at the moment, I haven't seen anything meaningful in terms of a plan to for that to reduce. If that isn't going to reduce, then sooner or later there is going to be trouble, and this might break up and head off to this target, which would actually be a 30-year yield of 9.5. Have we seen those kind of yields before? Yes, we saw them back in the 70s and early 80s. And that's what happens when people really lose confidence in what you're doing. Okay, looking at the weekly chart, no current divergence. We broke down below this rising support trend line, but I don't think that's particularly significant. This would all be the right shoulder on that bigger picture monthly chart. On the daily chart, no current divergence. This looks like a bull flag, which has broken up, and we've got an IHS, which is also broken up, with a target in about the 50.2 area. And I'm leaning towards that making target, and I'm leaning towards seeing a retest this high here at 51.53. At which point, I think we've then got another big inflection point. You can see this is the start of the this is the start of the head, I think. No, that's the head down there. So this is where the right shoulder starts, or is it there? Hang on, wait a second. No, this is all the right shoulder here. So basically, it's thinking about breaking up, but it hasn't done that yet. If we see a firm break above this, then it's time for a run to cover, and we'll probably see a big decline start in US Treasuries. Looking at monthly, we've got on the TNX chart, we've got an RSI 14 sell signal fixed. The only other one on this chart in the last 50 years made target, but to be honest, that's not really much for sample size. But I think it could make targets, but to do that, I think we need to see a bit of fiscal responsibility from the government and the administration, and I don't think we're in much danger of seeing that. So I'm thinking sooner or later that may fail. Again, we've got an IHS which may break up. Again, if that breaks up, firm break over the 50 level, that would have a target up over 90. And that, I think, is doable. In terms of the amount of debt that the US is carrying, without a clear plan to actually have some kind of fiscal discipline going forward, which there most definitely isn't at the moment, normally I would expect interest rates to be over 6. So at the moment, I think, and I don't think it makes any difference what the Fed does in terms of lowering interest rates. I mean, I know Trump thinks that if the Fed lowers interest rates to 1%, then that's what the US will pay on its debt. No, not true. The Fed needs to sell the debt to somebody. They need to sell it at an attractive enough price, and at 1%, there are many other options. And unless the Fed's prepared to buy it all themselves, and I have to say experiments like that have been done, particularly in Japan, then there won't be much of a market for it, and interest rates will go up, because interest rates really are the yields on the Treasury bills, because that's the baseline for all borrowing in the US. Okay, looking at the daily chart. RSI 5 buy signal, which has reached the possible near miss target. This looks like a compression triangle forming here. Again, I'm leaning towards that being a bull flag of some kind. We do have also either, I've drawn both views here, either this is an IHS which is formed and is about to break up, but I think the more realistically, the head and shoulders is down sloping. It's already broken up with the target in the 43.9 area, and we've just been consolidating in a triangle until we head up and head to that target. So I'm leaning up on bond yields, down on bonds. In terms of the 5-year, which I've only just started doing because I need another view really. It's this again looks like a consolidation triangle before a move up. Looking at TLT, we've got a decent looking pattern pointing down. It's not huge, but we've got a head and shoulders here, which is broken down with the target in about the 84.7 area. And I think it's got a pretty good shot at making target, although I have drawn in a potential bull flag that might be forming here. We do have a tiny bit of positive divergence, a very small buy signal that's fixed on the daily, hourly chart, but it's only small. I'm not reading too much into it. Could this be a bear flag? No, it's too large, but we do have a rising megaphone, which is breaking down here. So we shall see. All the patterns at the moment pretty much are saying bonds down, yields up. All right, great. Let's have a look at CL. All right. Now, notwithstanding what's happening in Venezuela this weekend, I'm not sure what impact this is going to have on prices. One, Venezuela wasn't actually exporting an awful lot. And two, prices have been down at this 50 to 60 level because there is an oversupply in the market at the moment. Now, I think Ukraine is doing its very best to fix that by knocking out as much of Russia's refining capacity as possible. But I think at the current price, under $60, I think an awful lot of oil producers, including an awful lot of the ones in the States, aren't actually making any money. And really, I mean, Russia has other issues and the prices it can sell at and so on and so forth. But I mean, in normal times, their production cost would be about $40. That's not unusual. And a lot of the frackers really would need 60 or better. I think in terms of the oil sands in Canada, I think they must be looking at break even or at least $50. So at the moment, we're at a stage where a lot of them are barely making money. I'm not seeing this going down an awful lot from here. We do have a nice bullish scenario, but I am thinking we could go a bit lower. But I think in terms of how Venezuela will land on this, I don't see any particular reason for this to be strongly positive to drive prices up, because I don't see that there's any real increased risk of a squeeze in the market. I could be wrong. But that's my feeling. Okay, in terms of HO, we've already had a double bottom try to break up here and fail. We've got a potential second double bottom here too. I'm still waiting for a retest of this low here, and we still haven't quite seen it. We will see. In terms of RBOB, leaning towards seeing a retest of this low here too. We will see whether what happens over the next week. In terms of NG, we had a nice looking hit versus head and shoulders. It broke up and it failed. So at the moment, I'm leaning towards seeing a retest of this low here, just under 3.5, and we may see continuation lower. This was a very strong move up, and this has been a even stronger move down. But at the moment, I think we may well be about to continue down, but at the least, I'm leaning towards seeing a retest of this low. All right, let's have a look at that on the bigger picture charts, and let's have a look at WTech. Right, looking at WTech, bigger picture. Obviously, we've got these falling wedges on all of these, which formed from the highs in 2022. Coming down from 126 and getting down more than 50%. Since then, this wedge has broken up, and it could be the wedge is expanding, but if so, we will come back down and reach wedge support, which we could do. So I am considering that possibility. In terms of divergence here, we have none on the weekly chart. We have none. Mainly, I've been watching for a possible bottoming setup to form here, because I do have a theory for how we could see. At the moment, we've got a surplus in the market. That could change. If a lot of Russian production gets knocked out of the market. And a lot of the refinery capacity has been knocked out. At the moment, obviously, they're under an awful lot of pressure in terms of what they can export. The shadow fleet is being partially embargoed, partially because, of course, the asymmetric warfare that Russia has been waging on the European countries. I think we could, if they can't sell the oil, then they'll be in the same position they were at the end of the Soviet Union, which is they can't sell a lot of their oil, and actually a lot of their oil might just freeze up because you have to continue taking it out, otherwise it will freeze up, and if it frees up, it'll be a massive job involving an awful lot of money and time and expertise to get it freed again. And at the moment, Russia has no friends apart from Donald Trump. So we will see. But I think Russia has been producing about 9 billion barrels a day. The surplus is reckoned to be about 2 or 3 million. Russia goes out of the market, that could really change the math. So I am looking at potential bullish patterns, which could, in a scenario which wouldn't need to be that one, but could be that one. Take this back up, basically sustained break up over 78.4, and the double bottom target here would be over 100, and that is something I'm considering as a possibility. In terms of the daily chart, no divergence here really. Lovely looking potential double bottom, which obviously we were waiting for a lot of last year to complete, and we will see how it goes. Nice looking little falling wedge here. Not definitive, not the nicest trend lines here, but I am wondering if we are actually making a short-term low. Looking at heating oil, we've got the same wedge, and it broke up, and we're looking for a reversal pattern. We actually got a reversal pattern here. Looking at the weekly chart, no divergence again. In terms of the reversal pattern, we actually had a lovely looking inverted head and shoulders. It formed, it broke up, and then it failed. Now, normally this would mean that we see a retest of the low here at 194, and I'm leaning towards seeing that. Is it possible forming an alternate LHS? Not really. I'm not seeing a good alternative here or a reason to think that there would be one. We will see. The obvious thing to do is come back and retest the low here and set up a double bottom, and I'm thinking we may well do that. In terms of the we've got no daily divergence. Waiting to see if we're going to retest this low. Looking at gas oil, again, we got the same wedge. Now, this broke up, and I've redrawn the wedge resistance because we came back and we actually broke below the wedge support here. So we're back to the original wedge, which is unbroken. No divergence on the monthly or the weekly. On the daily chart, very nice looking potential double bottom, but if it goes much lower, then that's going to lower in quality as well. But at the moment, that is looking pretty good. All right, natural gas. Natural gas, we've got a double bottom which broke up back in early 2025, and I really thought we might be heading back up into the this target here. We saw a pullback here, we held the monthly middle band, and then we saw a breakup which looked as though it was going to head up into this target, but then reversed and gave most of it back. The target's 5.9. At this stage, I'm leaning towards this being a significant failed breakup. So I'm watching for the next test of the daily middle band, monthly middle band rather. I've got that at 3.31, and we will see how that goes. But I'm thinking we might see a break below and head down into retest of these lows here, with the low here being in the 1.54 area. Looking at the weekly chart, no current divergence. I have drawn in a potential trend line here that I'm watching here. Could this be a rising megaphone? It still wouldn't be a good quality one because we've only got 2 touches on the lower trend line. But I am wondering if this is all a bear flag setting up a retest of the low. In terms of the shorter term chart, this has been a stiff falling wedge, and at the moment it doesn't appear to have stopped dropping. So we shall see. All right, great. Let's have a look at gold. Now, gold, I was being asked a question. Well, I was seeing a lot of talk last week that gold has made a significant high, and it is possible that we might see a consolidation coming up here. We've obviously had an extremely nice run, not so much on gold, but on particularly a lot of the others, and it could be that we'd see a period of consolidation. If so, I've got to say, looking at this, I'd still be leaning towards seeing another retest of the all-time high. We've got a really nice looking potential little IHS here. Sorry, just draw the line across here, but this is nice. And that would basically set up a retest of the high. We could see a larger retracement from there. I'm not seeing anything really compelling to suggest that we're going to, but maybe. SI. This looks like a bull flag forming after this amazing run that's just taken us up to 82.5. Again, I'd be leaning towards seeing at least a retest the high. Looking at Palladium. Palladium, we've got a, on the bigger picture, we've got a very nice looking inverted head and shoulders, which has broken up and is nowhere near target. But we did see a move up to 2130 area and a very steep decline from there. This may just be a pullback, and it hasn't failed any larger patterns here. So I'm not seeing any bigger picture cause for alarm, although I am watching the size of this, and obviously more than 25% down is still pretty impressive. So we will see on platinum. This looks like it may well be a bull flag, which has broken up. Wondering about forming possible IHS here, and then breaking up back into the high. And on copper, we're close to the high, and this looks like a bullish consolidation before we go back up and retest this high. We will see. But let's have a look at the bigger picture on those. Okay, gold. We've gone through every trend line here. We've gone through every bit of divergence here. We had some big monthly sell signals brewing, and we have bombed our way through those. On the weekly chart, however, we do have a possible RSI 14 sell signal brewing. We do have an RSI 5 sell signal that is fixed. Now, I would say that the last 1-2 of these both failed. And that is something to consider, because this, of course, could just fail too. Do we have, when was the last time we saw a big consolidation? It was here. We didn't get a signal for that. So we'll see how it goes. But I do have a sell signal that's fixed on the RSI, weekly RSI 5. And if we see a bit more weakness, I'm going to see another one on the weekly RSI 14 as well. In terms of the daily chart, no current divergence. Does it look toppy? Well, honestly, it doesn't look as toppy as the... this hasn't been running as strongly as the others have. I think we could see metals still do pretty well again in 2025. I think a lot of governments are looking very indebted. I think the dollar's looking less and less attractive, and I think gold is the traditional alternative to that. I think this has got legs, and I've got a chart to show to you here, because the thing is, the reason that gold's very popular is because, one, it's been around for thousands of years, and it's always been a decent store of value. It's never really been used for anything. Mainly people dig it up out of a hole in the ground and then, refine it and then put it back in another hole in the ground. But I mean, I just wanted to show you, I'm pretty sure I've got a chart here. Bear with me a moment. All right, here we are. Now, this is the diamond price index over the millennium so far, and you can see it's not been doing terribly well, but there's a good reason for that, and they've managing to make this move up here into the 2011 area was, frankly, I thought pretty impressive, because back in the 90s people started being able to make synthetic diamonds, and now an awful lot of the market is synthetic diamonds. And if you can make something artificially that is pretty much indistinguishable from the real thing, then the real thing tends to go down in price. That's what we're seeing here. The thing is, you can't do that with precious metals. They are precious because they are rare, and they're still rare. And we're not going to be making alternatives to those that aren't extremely radioactive, for many decades, at the minimum, if we can ever do it. And that's why gold price is going up. Dollar is going down. Confidence in central banks generally is going down. And while crypto is an answer to that, there is also the other thing that people are a bit worried that when quantum computing comes in, then it's going to wipe out all basically the crypto encryption and make those valueless. That's not a problem that gold's going to have, or palladium, or platinum, or silver. I think all of these have got considerably more legs, and if they see a big pullback here, I'm still thinking that we would see a lot more upside, and likely a lot more upside in the next couple of years. And if we see the bond crisis that I'm thinking we might see, and a flight from the US dollar in the next couple of years, then I think precious metal is going to do pretty damn well. So we'll see. All right, silver. Obviously, we got over resistance at 40, and then it doubled. Certainly. Do we have any negative divergence here? No. Does it need a bit of a pullback? Yeah. So this is very impressive, and you can see there's nothing more impressive in terms of than the move on this chart. So, and really, up from 1753 at the low in 2022, this is, gone up about 5 times. It's pretty damn impressive stuff. In terms of the weekly chart, we got a possible RSI 5 sell signal brewing, but I wouldn't be surprised to lose that at all. We've already lost the negative divergence on the RSI 14. In terms of the daily chart, no current divergence of any meaningful size. No, I don't think we've got any negative divergence at all. So I think we're seeing a bit of a pullback here. Might backtest the daily middle band at 66, but I'm not seeing anything compelling saying that we're going to be going down here, and I'm not seeing anything resembling a reversal pattern. Looking at palladium, now here we actually broke down, we broke up from an IHS with a target in the 2550 area, and we got about just less than halfway there, and we've seen a big pullback. Has this failed? No. It would need to get back below the IHS right shoulder low, which I've got at 1320, for this to fail. This is a long way away from failing yet, and I still like the upside. We've already seen the platinum IHS make target, and that looked pretty unlikely when I posted it. This I think has got a shot, and I think that may well make a target 2026. In terms of the daily chart, we do have some very, very steep negative divergence here on the RSI 14 and the RSI 5, and we've got those sell signals fixed. So I am watching this with interest, but really these divergences weren't looking particularly convincing. We shall see. They are technically decent signals, though. All right, looking at platinum. Platinum, this was the IHS that broke up, and this was us making target just before this pullback started. In terms of the weekly chart, we've lost divergence on the weekly, and we had sell signals on both the weekly RSI 14 and the RSI 5, and both of these have failed. And this is what can happen in strongly trending markets, which is why I don't really trust the one on gold either. In terms of daily chart, we've got some weak sell signals fixed, but they're not really an awful lot to look at. So 6 of one, half dozen of the other. But is there anything particularly convincing saying this is heading down soon? No. Looking at copper, leading towards seeing this high retest here. This is the monthly RSI 5 sell signal. And I've got to say, these tended to be target. 1, 2, 3, 3 hits and 1 miss, but it's now 2 misses because we've lost divergence on this one. Yeah, we have. So we've still got a monthly RSI 14 sell signal fixed, but it's weaker without the RSI 5 one. Leading towards seeing a retest of the high, and I am wondering whether we might see a breakout when we get there. In terms of like house building and so on, there's no reason to see that breakout at all. But I have been reading that it's very important in building data centers, and it does look like next year we're going to be building a lot of data centers. So I'm keeping an open mind on direction. Weekly chart, no negative divergence on copper. No negative divergence on the daily chart either. But when we do retest this high here at 5.936, that is, of course, a potential double top. In terms of GDX, weekly chart, possible weekly RSI 14 and RSI 5 sell signals brewing. Obviously, we went up and took out this high at 58.50 by over 50% now. That was very impressive work. Do I see a reversal pattern here? No. Could we see a pullback? Yes. On the daily chart, we've got an RSI 14 sell signal fixed, quite an old one. On the hourly chart, nothing really to report. And overall, I'm not seeing an obvious reversal pattern. We'll see. Looking at GDXJ, hasn't quite done quite as well getting up into the 2011 high, but we've actually almost made it now. Again, weekly negative divergence, both RSI 14 and RSI 5. On the daily chart, again, RSI 14 sell signal fixed, and again, nothing on the hourly chart and no obvious pattern here. We'll see how it goes, but I think the lack of an obvious pattern here has me leaning more towards the upside. We shall see. All right, great. Let's have a look at the other commodities. All right, looking at coffee. Coffee, we had a little bear flag channel breakdown here. Didn't make the retest of the low and making a higher high here. I'm thinking we may be forming a larger bear flag channel. I'm still leaning towards seeing a retest of the low. Watching resistance slightly above. We're at the moment trying to get over the monthly middle band. We've also got some trendline resistance in the 365 area. Okay, looking at sugar, this looks like an overall bear flag forming. I've been talking about this for weeks, and I've drawn in the obvious flag support. Not seeing an obvious flag resistance, but I'm leaning towards this being a bear flag. Are we going to make the double bottom target in the 15.43 area? I think we might have missed our chance to do that. We did get pretty close. Looking at CC, double bottom broke up with a target in the 630 area. That's almost entirely retraced, although it hasn't failed because we haven't gone down below the oh no, we have. We've actually got as low as the initial the first low of the double bottom. So, all right, in that case, the double bottom has failed. Still leaning towards seeing a retest of this high. We'll see how that goes. Looking at CT, we've still got a very nice looking overall double bottom here. Hasn't broken up yet. Lumber, this also looks like a bear flag which is forming. That may have started breaking down already. Looking for a retest of the low, may well see continuation lower as and when we get that. Looking at the ZW chart, I was looking for a retest of the low. We've seen it. We've got a potential level bottom here, which I'm watching on corn. We have gone lower here. Keeping an open mind. But it may be that we'll see a fail further down. I was leaning towards seeing a retest this high. We've not got below this rising support here, but I'm thinking that we're getting pretty close to that. And if we get below that, then, that may be a breakdown rather than a break up. Looking at soy, well, this move up here was all about a deal with the Chinese where they were going to buy a load of soybeans, and this is all about falling back to earth because the Chinese didn't actually buy much in the way of soybeans. So it's almost given back the entire move now. Thinking it may head back, retest this low here in about the 103.32/3 area. Not a great time to be a soybean farmer in America at the moment. We will see what with the troubles with Canada as well, and the phosphate and tariffs, and it's not great. It's ZL. We almost got back into the low. We've got a double bottom which is broken up with the target in the 50.45 to 50.8 area. That's still got a shot, although maybe that's going to get dragged down into retest the lows with soybeans as well. Looking at live cattle, I was saying I didn't think this was a bull flag. It was just a bullish consolidation. That's now breaking up. I'm thinking that this may well be another leg up starting and no negative divergence. And on HE, again, I'm seeing bullish consolidation here. I don't think it's that significant. This rising support trend line has been broken. And this short term, this looks like a bull flag or a triangle forming. Leaning towards the upside, and we've got a large double bottom, which is broken up with a target in the 88.65 to 90.2 area, of course. All right, let's have a look at those on the bigger picture. Right, coffee. We've been seeing a bit of a rally here, but the main picture we've got here is a double top, which is broken down with a target in the 2.65 area. And there's a potential larger double top here, which would support in about the 2.783 area, where coffee is trading well above historical norms. And I'm really leaning back towards it, heading back to reversion to the mean. I think this may have started already. On looking at the daily chart, no current divergence. Nice looking double top here, which has broken down. We're seeing a bit of a bounce after that break, but bigger picture, it's probably going to resume the downside. Sugar on the bigger picture, we've got this head and shoulders, which has broken down, and that's got a target in about the 9 area. And I'm thinking that may well be on the bigger picture where we're headed. Shorter term, there are a couple of potentially bullish patterns here, falling wedge. Nothing that looks as convincing as the head and shoulders that has already broken down. We've already had a couple of opportunities to break up here and bottom out, and we've not taken them. I think this just looks like a bear flag, and we're probably going to be resuming the downside. Cocoa, we've been seeing a bit of a rally here after the first thrust down below this big key support level here at 6427. We will see. We've still got an RSI 14 sell signal fixed on the monthly chart, and I'm leaning towards that making target. Again, we are well outside and above historical norms here, and I'm thinking we're heading back down in a reversion to the mean. In terms of the daily chart, we've got RSI 14 buy signals reached possible near miss target. We've got a slight break over this declining resistance. I am wondering if we might see some more rally here, but bigger picture, I'm leaning more towards the downside. On wheat, we've got leading towards seeing a retest of this low here at 492.50. We had a little level bottom which broke up here, and that hasn't technically failed, but we've got close enough to the retest of the low that I'm thinking that's probably the obvious next target. Looking at corn, we've got lovely looking double bottom here, and we are holding above the weekly middle band. So I would love to see this go up, but I'm just aware that at the moment this isn't looking that bullish. We do have an IHS which is broken up with the target in the 495 area, but I'm not that encouraged by this possible alternative bear flag setup, which is potentially starting to break down. We will see. I would love to see this go up. I am a bit concerned that that we might be about to see another down period on US grains, particularly. So, given that the trade situation is looking so ugly, and the position of the farmers in the US is looking so ugly, we'll see. All right, looking at soybeans, bigger picture, we had a bear flag here, but we lost the bear flag channel when it broke up. Still might be heading back here to come retest the lows, and obviously all of this China deal hype, which turned out not to be based on anything, has pretty much been given back already. Looking at the daily chart, we do have a possible RSI 5 buy signal brewing. I'm not seeing an awful lot of reason for optimism unless China starts stepping up and actually buying a load of soybeans. But it is a bit sad that there was so much excitement about them buying 12 million tons of soybeans when actually in 2024 they bought 28 million. I do feel very sorry for American farmers. Looking at cotton, weak RSI 14 buy signal is fixed on the weekly chart. This is a very nice looking potential level bottom, and at the moment it's not showing much sign of it breaking up. We shall see. Cotton's just been trading sideways for quite a while now. Nice looking setup, but nothing really coming through afterwards. Lumber, we've got a lovely looking bear flag here, and once we get down and break down below this rising support, which I've got currently in about the 490 area, then that would have a target and retest this low here at 35250. At the early 2023 low. And we've also got a double top, which is already broken down here with a target in the same area. I'm really liking that. And lumber is not likely to be a huge factor in terms of building data centers next year, but it is going to be suffering from the slowdown in housing. We shall see. This is the double top on lumber, by the way, and it's pretty peachy. So waiting for the downtrend to resume. All right. Lastly, let's have a look at cryptos. So, okay. Now I was looking at this on Friday morning, and I was noticing that we were starting to break over some significant levels. We got back over the daily middle band, but we've also got back over the 150 DMA. I've got that at 89,217, and we're up at 91. So what I was thinking was we may be forming larger flags here. Now, in terms of the where this could go, if you just take that trend line here and run it across here, I was talking to somebody about this yesterday, about the possibility that Bitcoin might get back up to about the 96,000 area and change. And I'm thinking that is a real possibility here. Not a lot to say about it on the 15-minute chart, but I think that's the picture I'm seeing here. In terms of that would still just be a larger bear flag, and I'd still be leaning towards it coming back, retesting the low, and very possibly coming back towards 74.4 retest. But in the short term, that's what I'm thinking. And the break higher is opening up the possibility of that happening. Now, the other one where we've got a flag which could get bigger is Ethereum. Less clear there, but I am thinking that we could get back up into, let's say, the 3,700 area. And again, these wouldn't be huge bounces in comparison with the declines that we've seen into those. So we shall see. Solana is a slightly different story. Now, Solana, we had a bear flag, but that broke down, but it's already, of course, made target. This could be a double bottom, and I'm watching for, if we see a sustained break up over 146.91, this could have a target. Where would that be? That would be about the target in about the 170 to 175 area. And looking at the bigger picture, that would not be disproportionate in terms of the amount we've gone. This would just be a fairly modest rally that wouldn't even take us back 50% of this decline. So I'm wondering about that. Not seeing anything really compelling to say that's about to happen, but I am thinking that we're going to be seeing some more upside on equities. And while we're doing that, I think crypto is trading sideways to up. and sideways to up could deliver that. We shall see how that goes. All right, great. In that case, I think that's a wrap. Everyone take care. I'll catch you guys again on Wednesday, and enjoy the rest of your weekend. All right, cheers.